This is The Bottom Line. The Bottom Line on 938 Live.
Oil prices have fallen by about a quarter since June this year as oil production in the Middle East picked up steam, while at the same time there were reports of weak demand in China and the Eurozone. Throw into the mix a booming and relatively nascent shale gas industry in the US that is threatening to undercut oil prices. We have the US benchmark price currently hovering at about $82 a barrel, while London's Brent crude is about $86. Now, to make sense of it all, we have on the line Daniel Ang. He's an investment analyst at Phillip Futures. Daniel, why are we seeing the recent fall in oil prices? Is it a story of low demand or high supply?
Well, the recent fall in oil prices is mainly due to the imbalance of demand and supply factors for crude oil. For the demand side, we're looking at a slowing global economic slowdown, whereas for the supply side, we're looking at high production from the US, as well as the return of Libyan crude.
Now, with the U.S. central bank looking to raise interest rates, Daniel, will oil prices continue falling?
We see U.S. Central banks increasing interest rate as having a mixed effects on crude oil. So on a short term, we see U.S. This interest rates rising would likely to strengthen the dollar. As crude oil prices are normally quoted in your U.S. dollar, we will see this would mean that it will be more expensive for countries to buy them. And so this will be in the short term. And in the long term, we expect to see interest rates playing a toll towards the oil-producing companies, and this will actually affect your future production, therefore causing oil prices to go up in the long run.
Now, if the fall continues, though, what would be the implication?
Well, we expect the implications to come towards more of your countries that are more export-reliant on crude oil. For example, will be Russia and your Middle Eastern countries whose GDP is mainly derived from your crude oil.
Now, investment bank Goldman Sachs says it expects U.S. oil prices to cross below $70 in the second quarter of next year. Do you think that's possible, Daniel?
Yeah, we think that's very possible. The current supply and demand factors paint a very bleak outlook for crude oil, and we hardly find much reason for the fundamentals to shift.
So, will we be seeing cheaper petrol possibly in the future?
Well, we normally see petrol prices as they don't really fluctuate much like crude oil prices. Large corporations tend to hedge their exposure to any short-term fluctuations. So, however, if prices really do persist, we do see petrol prices starting to inch downwards.
Thank you very much, Daniel. Daniel Ang, investment analyst at Phillip Futures on The Bottom Line. The Bottom Line is brought to you by Turkish Airlines, Europe's best airline.